To understand the mortgage mess, you need to understand why a lender wouldn't be worried about lending hundreds of thousands of dollars to risky borrowers like Dolores Parker Jackson.
I didn't have any problems getting any of my mortgages.
Every month is $5,000.
Or David Carbajal. Or Paula Taylor.
Why would they tell me as the lender that I can afford this if they know they're not going to get their money back?
The answer is simple, because the lender was selling those loans and the risk that went along with them. Who bought them? Wall Street.
Wall Street was the end of the line. That's where the rubber met the road.
Well, the only thing he did say...
Paul Molo is one of the top reporters covering the mortgage industry and has written a book about the entire mortgage mess.
Why did Wall Street have such a big appetite for these mortgages?
Well, it was all about making money. I mean, they made money in all sorts of ways, so it was a beautiful thing for Wall Street.
Here's how it worked. Loans like the ones made to Dolores Parker Jackson would be combined with thousands of others into giant bundles worth millions and millions of dollars. Those bundles were bought by Wall Street firms like Bear Stearns and Lehman Brothers. Wall Street turned them into big investments called mortgage-backed securities, bonds that they sold to investors who collected interest on them. Wall Street loved it.
They ran a bond factory. They just wanted to buy those loans and make bonds as fast as they could.
Wall Street bought loans and sold bonds to the tune of trillions of dollars. And for a while, everyone was making out. Homeowners, lenders, and especially Wall Street investors.
It looked like it was going to be limitless for Wall Street. They thought it was going to go on forever and ever.
But in the frenzy, everyone seemed to forget one thing. Those investments were full of risky, some say toxic loans. Loans to homeowners who'd never be able to pay them back for houses that seemed to many to be way overpriced.
When all this boom was going on in home values, we'd all sit in our backyard with our kids and having a cocktail in the afternoon, and we'd see the house across the street sell for 25% more than it did 3 months earlier. And we'd say, who the heck is buying these houses?
Many times the people buying those houses were the same ones taking out those risky loans that ended up inside the bonds being sold on Wall Street. But how much did Wall Street know or care about those risky loans? Remember Eileen Loiacono, the underwriter? She left that mortgage company and got a new job with a consulting firm hired by Wall Street to review the loans it was buying. She says the job was less about checking out the loans than churning them out.
They're cracking the whip. Chris, they're cracking the whip.
It's like the chain gang.
Kind of. And they don't want you to question anything.
And when you raised that red flag, what did your superiors do?
I got in trouble.
Even when she pointed out obvious fraud, she says Wall Street took the loan anyway and packaged it into an investment.
That took the wind out of my sail. It took the wind out of my sail.
She says it should have been obvious to anyone that loaning money to people who couldn't pay it back meant big trouble. And even if lenders and underwriters were signing off on bad loans Wall Street wanted to package as investments, there was one last chance to catch on to the problem. Before Wall Street firms sold those mortgage-based investments, they hired companies like Standard & Poor's to give them ratings, so investors, mostly big institutions like banks and pension funds, would know the risk of what they were buying.
They were very solid investments.
Richard Gugliotta was an executive with Standard & Poor's. He says the company did the best job possible with the information it had at the time.
The historical experience of mortgage-backed securities was, plain and simple, these securities do not default.
They never had a problem before.
They never had a problem.
And even when Wall Street came up with super complex mortgage investments, ratings agencies thought they had a handle on it.
We had two guys who came out of NASA.
So you got NASA scientists.
NASA scientists.
But some critics say ratings companies disregarded risks to please the very same Wall Street firms that were paying them to rate those complex investments. Gugliotta acknowledges that 90% of the time, his team gave them the highest grade possible, AAA.
A skeptic may say, of course they're giving a high percentage of these away because they make money by doing this.
Mm-hmm.
What do you say to that?
Nobody was giving away ratings. Every single deal that went out the door had to meet our criteria standards.
Looking back, he says it's clear the ratings were too high.
So knowing what you know today, you would not have given any of these things tied to mortgages a AAA rating.
Correct.
How could this go wrong?
It's not the rocket scientists who were to blame. It was the lack of data to support some of the assumptions that were being made.
In other words, he says no one knew just how risky the risky loans inside those investments could be, even those NASA scientists.
I don't care if you're from NASA or Vassar. There was no history at all of a market where you were lending money to people with bad credit to buy a house and you were accepting down payments that were zero. There was no history.
You'd have thought someone would have asked more questions. But just as the mortgage companies passed the risky loans to Wall Street passed the risk onto investors. So in the end, no one bothered to go back and take a closer look at the actual loans that Wall Street bought from mortgage companies where some underwriters were pressured to approve loans. Loans for borrowers who'd never be able to pay them off.
Wall Street has got this reputation for being the smartest guys in the room. When someone from a reputable Wall Street firm calls you up and says they have a great investment, you tend to believe them.
And plenty did believe. Huge institutions, corporations, pension funds, government agencies here and abroad had invested trillions of dollars in a system they thought was sound. Some Wall Streeters had made out like bandits. For the rest, the end was near.
Here we are. You're rich. But what are the rest of us going to do?